Good day to you, my trading friends. It is Monday, December 14th, 2020. And because it's a Monday video, you know it's hopefully going to be a viewer-suggested trade or a trade idea from me. Recently, we had a new, subscriber. I don't know if he subscribed or not, but Trey Rosenberg left us a nice comment down in one of our videos asking that I take a stab at metals. And I think that's a great idea because honestly, we haven't done a ton of metals trade. I think we've done maybe gold and silver. And it looks like he put in the comment a symbol that I've never looked at, AUY. So we're going to look at a long put vertical because it has low volatility right now. And I hate to be the guy who complains about doing debit spreads and then suggests on his day to shine to do a debit spread. But here we are, we're looking at AUY, which has wonderful liquidity, at least in the monthlies. We'll take a look at this one, and I think we'll also look at some alternatives. I'm dying to hear from any of you out there that do trade metals, or what your take on this trade would be. So we're looking at, like I said, high liquidity and an IV rank of 13 right now. So that's why we're looking into debit spread territory. So it is a low-priced underlying. So there's even the option to sell a naked put, right? I mean, I've definitely looked at that. That's not a bad idea. There's some compelling reasons to consider that. So we'll look at a few trades with AUY and maybe in an alternative ticker too. All right, so let's head on in to the platform, shall we? So hi everybody, my name is Neil. This is Option Theory, and I'm guessing if you've tuned in before, you knew that already, and I want to thank you so much for being a loyal viewer. For those of you that are new, this is something what we do here. We use ThinkOrSwim and we build out a simulated trading portfolio because there's a lot of fear that goes in with trading, and we want to take that fear out. We want to get all the learning and get in the confidence that we can do this successfully, right? So head on down to that description. You should see a link to go sign up for TastyCharts Cherry Bombs. We do mostly those. Those are 4 days a week. We do cherry bomb trades. And those ideas come from TastyCharts. So that link will get you over to their email sign-up page so you can get on their email newsletters, whichever ones you choose, but the cherry bombs are what we do. That link is not something that I get anything for, no referral fees or paid to me in any way. I just want to support you with some, an opportunity to join a group of like-minded people and gain that confidence. All right, now that we've said that and you know why you're hopefully here, so let's move on to what we can do. We see we have our portfolio open here. We're looking at just our margin trades. Our strangle up here. If you noticed this, I kind of did this last week. I broke up my trades into groups, and I have my undefined risk, so I can keep right at the top, keep an eye on those because those are the ones that make you the most nervous. And so these are where we're going to be hopefully putting a trade in here, although we could potentially put one in in the undefined risk, and we might play with that in the IRA trade as well. All right, so with that, let's go on over to the Analyze tab, click on Add Simulated Trade, and here we are. We're going to be in the monthlies with 32 days to expiration. Now, I know with the Tasty Trade mechanics, put us, 45 days is the sweet spot. And while TastyWorks does claim that this is a 4 out of 4 liquidity underlying, if you go ahead and open up these weeklies and you look at the open interest, which is this column right here, and you're not seeing my mouse, so shame on me. Let me go ahead and hit that little keyboard shortcut that makes my mouse appear. And so here's the column that says open interest. That may not be what you have here, so you could click here and change that to, I'll find it. There it is, base price in quotes, and go to open interest. So you can see here that we really do not have a lot of interest in these weeklies. However, if you jump back over here to the monthlies, we're looking at thousands, right? So that is fantastic liquidity. Thank you very much. Now that we have that and we can see why we want to be in these monthlies, which was, you got to have your reasons for breaking the away from the mechanics, all right? So what you see down here is I have already built it out here. I've got a $1 wide long put vertical. Now, why a long put vertical? Why am I being bearish on this one? If we head over to the charts for AUY, you could see here that it is pretty flat, but I'm no expert technical analyst. We have been coming down from our high here, but we keep seeing lower lows and lower highs, right? So I fully expect this to continue moving down. Just because this is what's been happening, though, doesn't mean that's what's going to continue to happen. As we all know, if you watch any bit of Tasty Trade, nobody knows anything. And, technical analysis is fun, but it doesn't always work. It's not foolproof. Otherwise, everybody would use it and it would always work. Right? So I am bearish on this one. And if I pull up TastyWorks right now, which I'll do that by hitting this little keyboard, and you'll see here that is not showing what I want it to show. So there it is. There is the same trade that we have pulled up with a 54% probability of profit. That's not what we wanted to look at. We wanted to look at this here. I see myself coming down from this. This looks like it's about to come down again. And we're really in the middle here. So the other things that I see are showing me that this would be potential bearish. Neutral to bearish on this one. So now that we have that, let's pop on back over here and take a look at this probability-wise in ThinkOrSwim. So if we go over to the risk profile here, what is particularly interesting, and look at this expected move. Anywhere between $5.20 and $5.65, I suppose, is what what the market is expecting as a move. And you look at max profit here, or max loss, right? It is not likely that we even get to a max profit or a max loss, according to this expected move. So what's it going to go to? Is it going to go to some loss for us, or is it going to go to some profit for us? According to the TastyWorks that we just saw there, you could see that we were looking at a 58% probability of making half of our profit in this one, or a 54% probability of profiting at all. So not particularly in love with this particular trade. But my thoughts on metals in general, I think it's, my thoughts maybe are, it's great that we have the opportunity to expose ourselves, but in positions with, all sorts of different products. Like we just did MJ, right? Cannabis. That's so cool. It's cool that you have a variety of different products. You know what? Let me pop back in over to TastyWorks. I want to show you something here that I was looking at. So over here, this is a new feature that they have here, this TastyCharts. And I pulled up gold, GLD, the ETF that tracks gold, and AUY. And it is a year's view here, but I just have the most recent, whatever fits, back into June. It's not a perfect match, but boy, is it very similar price action. Right, here we are from coming up this way. Here's this. We have a gap down right here. This is the gap down here. It comes back up a little bit, came back up more here. It began to drop down. It popped back up. Here's it popping back up. You can see that AUY does pretty much match GLD. But instead of it being something where GLD is a much higher price underlying, here you have something where if you wanted to, you could go with a, like a naked put. And all right, so if AUY, if gold becomes free, right, you could then lose, $500, right? So I have to say, I do find myself, and I know I put here long put vertical, that I'll try that for my margin, but I think for the IRA account, what I'm thinking I'll do is throw in the naked put. So here we are. I'm going to go ahead and right click this trade, choose confirm and send, and review the fact that we have $44 of maximum profit with a 56% probability of us taking $22 off the table in the next 32 days. And that'd be fine. That'd be great, right? And $56 of maximum loss. I'm going to go ahead and send that. But I want to address this that just popped into my mind. Trey, in his comment, talked about buying calls and let's just call it buying options in general. And I get the attractiveness of being able to say, all right, I'm going to spend, 30 cents. I'm going to spend $310 on a call, right? So let's go ahead and do, I guess we should stay with ThinkOrSwim, shouldn't we here, right? If we go ahead and we click on this 550 buy, we're going to buy an out of the money, just slightly out of the money, right? We're looking at a 50 delta here. It's really an at the money call for 31 cents. Maybe you could mid-price that where somewhere like 29 cents, right? Maybe you could do this. So you could pay 29 cents for a call. And you're thinking, this is great. And if it blows up, that'd be amazing, right? And of course it would be amazing. But what are the probabilities of that happening for us, right? So not only does the underlying have to move up to 550, right? It then has to move up an additional 29 cents for us just to make even, right? So let's go ahead into that risk profile here. And you can see here that breaking even here at expiration, we'd have to be at $5.80, which is outside that expected move. So go ahead and set that over to break even at expiration. And hang on a second. You know, it would be great if I had the right. Oh my goodness. Was I doing that wrong before? Maybe I was. All right. Either way, you're looking at this put there, this call here that you buying at 68% probability of losing money on this one or breaking even or losing, or only a 32%. I'll go up around for you. 32% probability of breaking even or better. And that's why I feel like if you're going to go, bullish by buying a call and Tasty Trade believes you should finance that, right? So let's go back and let's buy an in the money one here. Let's buy this 450 and then sell this 550, capping our gains, right? But now what's our probabilities? Here we're looking at a 55% probability of profit. Yes, we could lose 73 cents, but we could also make, 27 cents. Not nearly as amazing as that upside, unlimited upside. But now instead of having a 32% probability of profit, you have a 56% probability of profit. So buying calls, buying puts, they don't make a lot of sense to me. As far as if you're playing a law of large numbers and you're going to roll the dice, you want the probabilities to be in your favor. I get the idea of buying a lottery ticket every once in a while. That seems exciting. And if it doesn't cost much, go ahead. But you should expect it to be as productive as a lottery ticket has been for you. And so I ask you this, how many times have you won the lottery? I'm waiting. Leave it in the comments below. All right. So now that we've got that, let's switch over to the IRA tab, IRA account, stay with AUY, and consider a naked put. I know I said I was bearish on this one, but hear me out here. So let's go ahead and click on the selling the 5. You know what? Not even. Let's go ahead and go right at the money. And this is slightly in the money here. If I go ahead and click on sell here, what's the mid price between? That's 4. So add 2. We're going to go 33 cents. Click on that, notch it up to 33. One contract. Let's go ahead and take a look at the risk profile for selling a naked put for $5.50, where we could lose, big. So here we are. We're looking at the proper expiration here. Expected move. And yeah, there we are. We're going to go set slices to break even at expiration. So now we're looking at a 58% probability of profit on this one. And that's pretty dang good, right? What we could do is, if you didn't want to see the 550, you wanted to see the 5, you wanted to go a little further out of the money, right? Give yourself some better probabilities, but lower profit. Here you're looking at a 79% probability. Let's call it 80% probability of keeping your money, right? Keeping all of your profit. At this point, though, what we'd be looking at is no, that's not right. A 12 cent. There we go. Let's fix that. That's better. 71%. Okay? Boy, I'm all over the place today. What do you like? Do you like the long put vertical? Do you like the naked put? You're not getting a lot of premium in low volatility though. So, I'm okay with this experiment, testing this theory. I'm going to go ahead and I'm going to notch this back up to the 550. I wouldn't mind being long a few shares of this stuff, right? 100 shares. And then seeing what happens if we end up being put, these shares, go and doing some covered calls. Why not? Let's have a little fun with this. And we'll go to, I think we said 33. I'm going to right click this trade, choose confirm and send, and see that we could take a maximum loss of $517 should AUY go to, go bankrupt, right? Or I could make $33. Of course, we would manage this at 50% of max profit. But because I'm looking to see, hey, maybe I'll get put this one. I'm willing to buy this, right? At $5.50, but why don't you pay me to do that? So I'm going to go ahead and hit send. That's going to go into my IRA trade. I did mention some alternatives, but I want to go to TastyWorks to do that just because. All right, so let's go over to the trade. And then I was looking at this other stock here. KGC is another gold type product. But when you look at the, the analytical, what am I looking for? The analysis, the technical analysis, there it is. I feel more bullish on this one. So if you wanted a trade that you could be bullish on, and I know I just did put a naked put, which is a bullish trade. We also looked at a long put vertical, which is a bearish trade. So this one I could be more bullish on. So if we go ahead and hit trade on this one, you'll see I've already dialed in this case, a long call vertical in this one. So here we're looking at a long call vertical that has a low probability of profit, but a high P50 of 60%. And it only costs us 33 cents. For those of you that are dying to have a lottery ticket feeling of taking a small amount of risk to have a larger amount of profit, but there's even a good chance that you could walk away taking off $33.50 from this, right? Which is about what I'd make on that naked put that you just saw if I let that one go to expiration. So let's take a look at the chart again on this one here. So similar downward movement, right? Although this one is reaching that lower band, and here we are. We've seen what looks like it could be crossing back down again, but when we've been below this line, we've come back up. Below the line, coming back up, right? We've come below the line, but we haven't come back up yet. Looks like we're on our way. So I could be more bullish on this one as well, right? So what should I do? Should I put that trade on as well? I don't know. I already put 2 gold trades on. That would be sort of breaking from the mechanics of being product diverse, right? I don't need to put on too many gold trades right now. But I wonder, which would you do? Was there any of these trades that you liked the most? If you were going to put any of these into your simulated trading portfolio, which one do you think you'll go with? So Trey, I hope this helps. We took a look at some metals. I'd love to hear from any of you though out there that enjoy trading metals more than I do. What are your thoughts on all this stuff? If you've made it this far into my video, I want to give you a thumbs up. I really appreciate all of your views, and we've reached 200 subscribers and then one, right? Granted, of course, I have subscribed to my own channel, so I am one of those. But either way, I am honored and flattered that for each and every one of your views that you've subscribed. And I do want to come out with a video shortly, making an opportunity available to the first 10 volunteers. It's not a cost thing. I'm not looking to profit and sell you anything. 100% promise I'm not selling anything. I'm looking to connect with 10 of my viewers, in a way that and learn a new tool. And stay tuned for a upcoming announcement about how you can volunteer to be part of that small group. All right, everybody, until I see you in tomorrow's Cherry Bomb trade, happy trading.